The bond market is seizing up, liquidity is drying up, and interest rates are moving significantly higher. Because of that, consumers are going to see higher interest rates across the board for all items. What's going on? In a normally functioning bond market, with the stock market selling off, savvy investors would get out of the stocks and immediately move into treasuries. Because of the push higher in price, because of demand, interest rates would move lower. But that's no longer functioning the way it should be moving. Instead, what we're seeing is treasuries are being dumped. More likely than not, foreign entities are selling off massive amounts of treasuries. They're also selling US dollars, which means our money supply and our future economic growth opportunities are shrinking as well. So interest rates on car loans, credit cards, mortgages, student loans, business loans will see higher interest rates. Because these foreign entities are leaving the United States, more likely because of irritation over tariff rates, as well as lack of consistency in investment opportunities, that money is leaving the United States, treasuries are being dumped, interest rates are moving higher. This will ultimately tax the U.S. consumer significantly more. Not only are we seeing higher tariff rates, but we're also seeing higher interest rates for the things that we purchase. Then we're also seeing a lower dollar, which would mean anything we purchase from abroad would cost more across the board. Ultimately, this will be a tax on U.S. consumers, and from there, what we're going to see is a significant decline in economic growth. Then in June, we get to see the refinance of some $8 trillion in U.S. Treasury debt. That will have to be refinanced at much higher interest rates, which may be exactly what these foreign entities are targeting. Because of that, U.S. consumers are likely to see taxes moving higher along with those higher interest rates. Now, for my Substack followers, those who are subscribed, I'm breaking down how this affects the economy, how this will affect the bond market, stock market, dollar, and all of those inclusive commodities such as oil and gold. Make certain to check out what I'm writing for this weekend going into next week, because we're probably going to see significant moves coming this following week after what we've seen with the stock market sell-off over the past couple days.